Welcome to This Explainer. Today, we're diving deep into the complexities of the major trading ecosystems. Our ultimate goal is to help you confidently figure out how to choose one safe market that absolutely won't jeopardize your future. We hear so much talk about strategies, indicators, and price action, right? But almost no one talks about the actual environment you're trading in. So let's fix that right now.
We have to start with a pretty terrifying reality. Seriously, what good is a massive trading profit if you can't actually use a single cent of it? Applying brilliant strategies, finding the perfect setup, and making huge returns is literally useless if you're operating in an unsafe, unregulated market that gets your funds permanently locked or your bank account totally frozen. Making money is only step one. Keeping it legally, that's step two.
Section 1. The Trading Safety Dilemma. We're going to evaluate the three major arenas today: Indian stocks, crypto, and Forex, strictly focusing on safety and legality. Section 2. The Indian market, the gold standard of ultimate safety. This ecosystem is practically bulletproof, guys. It's highly regulated by SEBI, meaning every broker and exchange has strict, non-negotiable rules to follow. Your funds are secured, and even more importantly, your actual investments aren't just sitting with a broker who could potentially go bankrupt. Your shares are locked safely away in government-backed NSDL and CDSL vaults. So even if your broker completely vanishes overnight, your shares remain untouched. Plus, there's absolute clarity on taxation and how to set off your losses. It's safe, it's clean, and it's entirely above board.
But as you know, ultimate safety usually comes with a catch. And here, it's some serious practical limitations. You've got a rigid 6-hour trading window from 9:15 a.m. to 3:30 p.m. If you work a standard 9-to-5 job, this market can be incredibly punishing because it's open exactly when you are the busiest. On top of that, if you decide to hold positions overnight, you face the massive risk of overnight market gaps. One random global news event could cause the market to gap way up or way down the next morning, completely destroying your trade setup before the opening bell even rings.
Section 3. The crypto market. It's an arena famous for insane volatility and infamous for being a regulatory gray area. Now, the crucial selling point here is the accessibility. Unlike the stock market, crypto is open 24/7, 365 days a year. It literally never sleeps. So if your day job eats up your entire morning and afternoon, this market gives you the freedom to come home, open up your charts at 8 p.m., and find trades on your own schedule. It offers extremely high volatility and high leverage, which is obviously super attractive if you're an active trader hunting for frequent opportunities. But then, bam, you hit the glaring issue staring every crypto trader right in the face: the harsh 30% flat tax and the 1% TDS on crypto spot trading. For a lot of folks, this makes profitability feel pretty much impossible. But actually, scratch that. There's a very specific, perfectly legal strategic approach you can use to navigate around this exact problem. Okay, here is the perfectly legal workaround. Instead of buying crypto tokens directly, you follow these steps. Step 1. Trade futures and options in INR on FIU-registered platforms. Step 2. Because you're trading derivatives directly in Indian rupees, you never actually convert your currency into a crypto asset like Bitcoin or USDT. Step 3. Because no actual crypto conversion happens, you completely bypass that flat 30% penalty. Instead, you just pay 18% GST on your trading fees, and your actual profits are taxed under your normal business income slab. For after-hours traders, this is an absolute game changer. Now, while sticking to FIU-registered platforms keeps your capital relatively secure in Indian bank custody, meaning you really don't have to stress about your personal crypto wallet getting hacked, it is vital to remember the broader picture. The crypto market as a whole still operates without comprehensive, top-down government protection. It is a gray area. If a massive systemic failure happens across the network, you just don't have the same robust safety net that you do with SEBI in the stock market. It's a calculated compromise you have to be willing to make.
Section 4. Forex, the offshore market characterized by high risk and absolutely no safety.
2,000 times leverage. Just let that sink in for a second. Offshore platforms hook young, ambitious traders with the totally absurd promise of up to 2,000x leverage. It feeds this dangerous delusion that a tiny $50 deposit can instantly transform into life-changing wealth overnight. They sell the dream, guys. But trust me, this leverage is nothing more than a carefully designed trap.
We have to be explicitly clear about what you're actually participating in here.
These offshore forex platforms are completely unauthorized by the government. Trading on them actively violates strict RBI and FEMA guidelines. Because they're unregulated offshore entities, they are absolutely notorious for rampant fake withdrawals and chart manipulation. And the most terrifying part of the whole shebang, if you get scammed, you have absolutely zero legal recourse. None.
Let's walk through the exact anatomy of this trap, because it's devastating. Minute 1, you deposit your funds, driven by that high leverage greed. Hour 1, you might actually see massive fake profits on their manipulated charts. You feel like an absolute genius. Day 1, you try to pull your money out, and your withdrawal request is suspiciously denied or just totally ignored. Week 1, the real nightmare begins. Because you are participating in an unauthorized market, transacting with shady offshore accounts, your Indian bank account gets completely frozen. And the worst part? If you go to the police to file a complaint about being scammed, you might actually get an FIR registered against you for violating FEMA laws. You lose your money and you become the criminal.
Section 5. Choosing your safe market. So how do we navigate this landscape and actually protect our capital?
When we put these side by side, the reality becomes undeniably clear. Indian stocks provide total security and the lowest scam risk, but they tie you to that daytime window. Crypto F&O via compliant FIU platforms offers a really workable compromise. You get moderate safety with bank custody, plus 24/7 freedom. And offshore Forex? That is an outright legal hazard with zero protection. Stay away. There's a core philosophy I really want you to absorb here. At the end of the day, we need to make money, but we also need to protect it. It's an essential, undeniable truth of trading. Earning capital means absolutely nothing if you willingly place it in an environment that is designed to trap it, freeze it, or steal it right out from under you. So I'm going to leave you with this final thought. Take a hard, honest look at your lifestyle, your working hours, and your legal boundaries. Ask yourself, which single market is truly worth your time, your hard-earned skills, and above all, your peace of mind?